So, you're running a dropshipping business, but you're not sure how taxes work. Don't worry, you're not alone. Taxes might seem complicated, but in this video, we're going to break it all down so you'll know exactly what to expect, how to stay compliant, and even some tips to save money on your dropshipping taxes. Hey everyone, this is Jean from DSers here, and today we're going to tell you everything you need to know about dropshipping taxes. We're going to talk about the different types of taxes, how dropshipping taxes work, and all the other different tips you should pay attention to. Make sure to stay till the end, leave a like if you enjoyed the video, and now let's get started. Alright, first, let's talk about what dropshipping taxes are exactly. Dropshipping taxes are taxes applied to profit and sales made by dropshipping businesses. This typically includes sales taxes, income taxes, and other specific taxes depending on the country or region where your business is registered. Taxes are important, and you should be sure to pay all of them if you don't want any bad surprise. There are a couple of reasons for that. One, just like any other business, dropshippers are legally required to pay taxes on their income and sales to stay compliant with local tax authorities. Two, there are consequences to avoiding taxes. You may face fines, penalties, and the risk of business closure. Planning is important. It will help you prevent financial and legal trouble while maintaining smooth business operations. Let's now talk about the different types of dropshipping taxes you gotta be aware of. In dropshipping, sales taxes are a type of consumption tax. It is levied on the purchase of product and services. More often than not, the end customer pays sales taxes on the transaction, and then you turn around and pay it to the government. It's good to know that sales taxes rate can differ significantly between states, countries, and even cities. Income taxes are based on profit from your dropshipping business. Usually, you pay an income tax as a percentage of your annual or quarterly total dropshipping profit. This tax applies to the net profits your business makes after accounting for all the expenses such as the cost of goods sold, advertising, software fees, shipping, and other operating expenses. You should also pay attention to VAT and customs. The EU uses a system based on value-added tax, also known as VAT, rather than sales tax, but the principles are similar to Nexus. VAT is a consumption tax. It is applied to the value added to goods and services at each stage of production or distribution. Custom duties, on the other hand, are taxes imposed on goods when they are transported across international borders. In dropshipping, these custom duties can significantly affect the cost of shipping and your overall pricing strategy, so be sure to pay attention to that. Now, let's get our hands dirty and see exactly how taxes work with dropshipping. For the purpose of this video, we're going to focus on the US. There is a lot to cover, so take notes. Let's start with sales tax collection. First, determine your tax liability. This means that you should determine whether you're required to collect tax from your customers or remit sales taxes to a state authority, or whether you should charge taxes depending on the location of your customer and where you and your suppliers have nexus. You may be wondering what a nexus is, so let me explain. It's a connection between your store and a state. It determines whether you potentially have tax liability there. Nexus can be physical or economic. Physical nexus generally occurs when you have a physical presence in a state, such as a store, warehouse, or employee. An economic nexus occurs when you exceed a certain threshold of tax to customers in a specific state. If you're not sure whether your activities count as having physical nexus or economic nexus, then consult with a state tax authorities or a local tax professional. Let's see the different scenarios you may face in tax collection. A. If neither you nor your dropshipping supplier have nexus in your customer state, you are not obligated to charge taxes. B. If you don't have a nexus, but your supplier does, your supplier might charge you taxes. C. If you have a nexus, but your supplier doesn't, you are obligated to charge taxes to your customer. D. If both you and your suppliers have nexus, your supplier might charge you taxes, and you're obligated to charge taxes to your customers. Okay, for your tax collection, in second, you also need to register for taxes. Once you've identified the states where you have a nexus, you'll need to register for a sales tax permit in each state. The registration process varies for each state, but typically involves providing information about your business, such as the name, address, and tax identification number. Third, set up your taxes in store. You can set up your store to manage the tax rates used to calculate sales taxes and set up tax overrides for products that have special tax rates. To streamline the sales tax collection and reporting process, consider using a dropshipping platform or tax compliance software. These tools can help you automatically calculate sales tax based on the customer shipping address. They can also help collect sales tax from customers at checkout and help you prepare and file sales tax returns on time. Now, let's talk about income tax collection. 1. Who pays the tax? Income tax is based on the profit you generate from your dropshipping activities and is paid by you as the business owner. 2. When to pay the tax. The specific timing for paying income tax varies depending on the country and the individual's or business's tax situation. In the United States, for example, individuals typically file for their tax returns by April 15th of the following year. 3. Where to pay the tax. You pay income tax to the tax authority in the country where your business is registered or where you live. For example, in the United States, you file and pay income tax to the Internal Revenue Service, the IRS, at the federal level. Depending on the state where you operate, you might also hold state income taxes. 4. Deductions and write-offs. Dropshipping businesses are eligible for various deductions, which can reduce your taxable income. Here are some examples of tax deductions that are more common. A. Business expense deduction, including advertising costs, website hosting fees, software subscription, like Shopify subscription, and supplies. B. Home office deduction. If you run your dropshipping business from home, you may qualify for a home office tax deduction. C. Shipping and fulfillment costs. Any costs related to fulfilling orders can typically be counted as business expenses as well and be deducted too. Lastly, there are VAT and custom duties as we mentioned before. Let's start with value-added tax, also known as VAT. It can be required in different situations. If a non-EU business sells goods to EU customers, they must collect and remit VAT once they exceed certain distance selling thresholds. Starting July 2021, the EU introduced the One-Stop Shop system, also known as OSS, allowing businesses to report VAT across multiple EU countries using a single registration. For example, if you are dropshipping products to customers in France and exceed a certain sales threshold, you'll need to register for VAT in France and collect VAT on sales. This threshold can vary depending on the type of product you sell, so pay attention to it. Even if you sell digital products, ebooks, software, and so on, to EU customers, you may have to register for VAT in each country or use the mini one-shop stop. Finally, custom duties. This can be tricky and can vary a lot. There are different possibilities here. 1. Work with your supplier or shipping company. Negotiate with your suppliers or fulfillment centers to arrange for shipping. This way, they handle the calculation and payment of custom duties. Some shipping companies or third-party logistic providers offer DDP. With DDP shipping, the seller, meaning you or your supplier, covers all the customs duties and taxes in advance, so the customer doesn't have to pay anything when they receive the product. They calculate custom duties in advance and include them in the shipping price. 2. Include custom duties in your product pricing. If you're using DDP, you can build the custom duties into the price of your product. This way, your customer doesn't have to worry about paying them separately. Use international shipping calculators or work with custom brokers to estimate these duties accurately. 3. Inform customers at checkout. Ensure your website clearly informs custom duties are included in the total cost. If duties are included, you can promote it as a benefit. No surprise fees, everything included in the price. Okay, let's now talk about my favorite part, dropshipping tax exemption. Tax exemption occurs when a dropshipper doesn't have to pay sales taxes on goods bought from suppliers because the end customers will pay them. There are various things you can do for tax exemption, like using resale certificate. A resale certificate is a tax document that allows a business to purchase goods for resale without paying sales taxes at the time of purchase. Instead, sales taxes are collected from the end customer when the goods are sold. Resale certificates are used to avoid double taxation, once when the business buys the product, and again when it's sold to the customer. If you purchase products for resale, you may be able to obtain a resale certificate from your state's tax authority. The certificate exempts you from paying sales tax on your purchases. To obtain a resale certificate, you generally need to follow these steps. Step 1. Register for a sales tax permit, also called a seller's permit from your state's tax authority. You can apply for a sales tax permit through the Department of Revenue, the tax authority of your department or your state, or in some cases, a municipal tax office. In the US, every state has its own procedure, but most applications can be completed online. Step 2. Apply for a resale certificate. Once you have your sales tax permit, you can apply for a resale certificate. This can usually be done through the same tax authority where you got your sales tax permit. Some states automatically issue the resale certificate when you receive your sales tax permit. Step 3. Use the resale certificate. When purchasing goods from a supplier or wholesaler for resale, present your resale certificate to them. This way, the supplier will not charge you sales tax on the products because you'll collect sales tax from your customer at the time of sale. Another thing you can do for tax exemption is called tax-exempt purchases. It's good to know that some products, such as certain types of food, medical supplies, or educational material, may be exempt from sales taxes. Check with your state's tax authority for a complete list of exempt items if you want to focus on those. As we said, there is a lot to cover, but what you need to remember is that every state or country may be handling taxes slightly differently. Sales tax and income tax are usually the 2 points that dropshippers should pay the most attention to. But VAT and custom tax should not be ignored. If you find all of this a bit complicated, don't hesitate to rewatch the video or leave your question in the comments, and we'll try our best to give you all the details you need. We hope you found this video helpful. If so, make sure to leave a like and subscribe so you won't miss any of our future content. Until next time, happy dropshipping!